When you apply for a home loan, you will receive important information that details the costs associated with getting a mortgage. One of the items you will receive when you first apply is called a loan estimate. The loan estimate comes from your lender, and most lenders will send it electronically. Once you receive your loan estimate, you may be wondering how to read the information and what does it all mean? Hi, I'm Lori.richmon, Senior Mortgage Advisor with Westcorp Mortgage Group, and I'm going to talk about what you need to know about the details of your loan estimate. So first of all, a loan estimate is a standard document you'll receive when you apply for a mortgage with any lender. The loan estimate, or LE, always follows the same format, which makes it simple to read and understand. It includes 3 pages, and lenders are required to send you a loan estimate within 3 days of applying for a mortgage. So what's included in a loan estimate? The loan estimate has 3 pages, and it's split into sections which outline the terms, closing costs, and fees associated with your mortgage loan. Some of the items you'll find listed on your loan estimate include a summary of your loan details, which includes your loan amount, the term of your loan, and your initial monthly payment. It also includes your escrow account information, which includes your prorated annual property taxes and homeowners insurance, your estimated closing costs, which include your lender fees, title fees, and whatever third-party costs that apply. And now, while it's important to understand all the terms on your loan estimate, there are a few key sections you'll want to pay attention to. The first section is on page 1 of the loan estimate. So page 1 is an overview of your loan terms and costs. You want to take special attention to the date of the loan estimate. That's because the loan estimate is only binding the lender for 10 days after that date. You want to look at the loan term and type, make sure it's the terms that you wanted. And also, you want to make sure it's the same for all the loan estimates you compare. And of course, you're going to want to look at the interest rate and pay attention to page 2 to see if you're paying any points for that interest rate. Page 1 also includes your estimated total monthly payment, which shows you how much you'll pay each month with principal, interest, taxes, and insurance. And it also includes your estimated cash to close. That includes how much money you need for closing, which includes your down payment, as well as lender fees, prepaid taxes and insurance to start up a new escrow account, and any third-party charges required for your transaction. Okay, now let's look at page 2. The second page of your loan estimate breaks down the costs shown on page 1. To better understand your interest rate and fees, you should look at the points. This shows the dollar amount you're paying to buy down your interest rate to receive the rate shown on page 1. Also look at application and underwriting fees. Lenders all charge different fees to process your loan. There's a section for services you can shop for. These are third-party services. They're not set by your lender, but you're free to shop for some of those third-party providers. And be sure to look at the calculating cash to close section. This box shows you a breakdown of the cash to close number shown on page 1. Okay, those were the first 2 pages. Now let's look at page 3 of the loan estimate. Page 3 has a few more key numbers, including what's called an in 5 years calculation. This calculation shows how much you will have paid altogether and how much you will have paid off toward your loan balance alone in 5 years. The APR is also shown on page 3, and that represents your total costs over the life of the loan, including interest, mortgage insurance, and upfront costs expressed as an annual percentage. Okay, now that we know what a loan estimate is and what information it contains, if you receive a loan estimate, does that mean your mortgage is approved? No, that does not mean your mortgage is approved. The loan estimate only shows what loan terms your lender expects to offer you if you decide to move forward. Remember, a loan estimate is issued based on an initial look at your application. If you want to get a loan estimate, you will need to provide your full legal name, your gross monthly income, the property address of the home you want to purchase or refinance, the property's value estimate or purchase price, your loan amount, and your social security number. At the time the lender sends the loan estimate, they haven't yet seen all of the documentation supporting those numbers on your application. In other words, your loan hasn't gone through full underwriting yet. If anything on your application can't be fully documented, like your income, savings, your loan terms are subject to change. Your loan estimates are also subject to change if there's a major change to you for your loan. For instance, if you want to change from a 30-year to a 15-year, or you decide you want an adjustable rate instead of a fixed rate mortgage. Only after the lender has fully reviewed all your documents will you be officially approved for the loan. So how accurate is a loan estimate? Although it's just an estimate, the loan estimate is very often a very reasonable approximation of what your loan will cost. So how do you get a loan estimate? If you don't have a home picked out yet, a mortgage lender is likely to give you a quote on possible costs. If you do have a home picked out, you can complete a mortgage application and get an official loan estimate within 3 days of application. Remember, a good lender will ask lots of questions to ensure they can help find the best program, payments, and options for you and your needs. Thanks for watching. This is Lori Richmond with Westcorp Mortgage Group. If there's anything I can do to help you understand your loan estimate, please shoot me an email at lori.richmon@westcorpmortgage.com.